My presentation for you all this morning is to talk a little bit about the different levels of attestation services that SEK performs, but also any CPA firm can perform. And the reason that we thought that this was beneficial for this seminar is because so often we, across the firm, will receive calls from a lot of nonprofits saying that they need an audit or they want an audit. Some board member or a donor, someone somewhere has told them that they really should have one, and sometimes there's a little bit of a disconnect in what an audit is and what it isn't. So we're going to just spend some time this morning talking about different levels of financial statement attestation services, which includes an audit, but then also something called agreed upon procedures, which has been an increasing way for us to really help our nonprofit clients in a little bit of a different capacity. So in my attempt to be a little bit creative this morning, I tried to spruce up the title to Audits and Reviews and Compilations. Oh my. You can see my little bit of my background in my bio here. I'm not going to read through all of that, but it is in your packet to reference as you would like. And so sort of the underlying subtopic to this presentation is how to really get the most bang for your buck and what is it that you really need. So I'm obviously talking to a group of folks here that work for organizations where your financial resources are limited. Some of you are going to need an audit, and so paying for that is certainly going to be a good chunk of money. But again, if there are other alternatives that can serve the needs of your organizations, we want to just bring a general awareness for those. So the first slide here is talking about different levels of financial statement attestation. This is where most people generally think of audits. There are also reviews and there are compilations. And I just want to briefly talk about the difference between these. Can I get a show of hands just to get a feel here? How many organizations represented here this morning currently undergo a financial statement audit on an annual basis? Okay. Anyone that has a review or a compilation performed? Few of you? Okay. So most of you are already familiar with the audit, but just to sort of reiterate here, an audit is going to be the highest level of assurance. It is not absolute assurance. And those of you that have had audits performed for years, if you actually read through the auditor's report, it very clearly states that we are not providing absolute assurance. We are not looking at every transaction and every individual line item on your financials, but we perform a risk assessment and look at the areas that we feel would be potentially subject to misstatement, and those are the areas that we really dig in deep to. The other thing with audits as well as reviews is that they have to be performed by an independent CPA. So again, those of you that have had audits probably hear us talk a lot about our need to maintain our independence. There are certain management level processes and things that we have to make sure that we don't cross that line to potentially impair independence, because we do have to maintain that level of being independent from our clients. So then a step down from an audit is something called a review, which it sounds like a couple of you may have. And this is generally a good attestation engagement for an organization that does not have some sort of external requirement to have an audit. A lot of times, if we have somebody that calls in for an organization and thinks they want an audit, we can talk them sort of down to a review. It's going to be a little bit less in scope than an audit. We're still going to perform some limited procedures, and those are primarily inquiries of the individuals involved with the financials of the organization, as well as analytics. Do the numbers make sense? We're going to look at year over year analysis to see if trends are in line with what we would expect with an understanding of the organization's background. But we're not going to do the deep dive that we do in an audit. And so coincidentally, it's obviously going to be a much cheaper alternative, but you do still get some level of reporting from us that says that we have performed these limited procedures. And for an organization, especially smaller organizations that don't need a full audit, sometimes a review will be beneficial for potential donors, grant applications, or just to use internally in making decisions going forward. And then lastly, we have a compilation. And this is really no assurance, but it is, again, a way for us as an outside organization to just sort of nicely compile your financial statements. In this case, the CPA does not need to be independent. So if you're working with us and we're doing other work for you that would preclude us from doing an audit because we're not independent, we can still do a compilation. And a compilation may or may not include all of those footnotes behind the statement. So you could have what we call a full disclosure compilation, which has the footnotes, or you might just have a non-disclosure comp, which is just the actual financial statements themselves. So let's talk about some reasons you may need or want an audit. Those of you who currently have, likely it's because they're one of these reasons fit for you. You may have bank financing that requires an audit under generally accepted accounting principles. You might have certain grant applications. You might get funding from the state or a federal level or some type of grant that you receive or donations that you receive. The granting agency is saying you have to submit audited financials on an annual basis. In Maryland and Pennsylvania, when you file an annual charitable registration statement, depending on your level of gross annual contributions, you may also need an audit or a review. So in Maryland, this would be filed on the annual update of registration form. In PA, it's the BCO 10. And you can see the thresholds here. So essentially, if you have $750,000 in annual contributions by default, the state is going to require a set of audited financial statements to accompany your annual charitable registration renewal. In Maryland, anything over 300,000 up to 750, you can actually do a review. And in Pennsylvania, that threshold is lowered a little bit to 250 for a review. In Maryland, anything under 300,000 does not have a set requirement. But then in Pennsylvania, anything from 100,000 to 250,000 would require a compilation. And keep in mind that when we're talking about contributions, these are both financial and non-financial. So I've actually had several organizations that never needed an audit, never needed a review, and maybe, they were gifted a large piece of property. And the value of that made their annual gross contributions exceed a threshold that they normally wouldn't have. Sometimes that can then trigger either an audit or a review. And then lastly, I put up here donor reassurance. And this sort of ties in a little here to the next slide where I talk about donor integrity. Because more often than not, when we have some smaller nonprofits that reach out and say, we want an audit because a donor or a board member has questioned something in our financials and we just need that third party to look at things and tell us that we're doing okay, there's a little bit of a gray area between, again, what an audit is going to help you just to discover and what it's not really going to tell you. So tying into reasons you think you need an audit, we talk about donor integrity. Sometimes there are allegations of fraud, or maybe not complete fraud, but maybe somebody thinks that the person who's overseeing the financials just doesn't have a good grasp on what they're doing. And so maybe the financials are potentially misstated just because of errors. Or sometimes they just want help establishing and improving internal controls. And while an audit does help to review controls that are in place, and we will certainly make recommendations, the goal of an audit would not be to provide an opinion on internal controls. So if these are some of the things that your organizations are looking for assistance with, sometimes an audit by sort of default can help with some of this, but it's not going to necessarily get to the underlying issues that sometimes organizations are trying to address. And I apologize because I know you really cannot read the individual details here on the little graphic that I have. But there is an organization called the Association of Certified Fraud Examiners, and they do an annual report to the nations. It's a global study of fraud, organizational fraud across all industries globally, so across the world, all different size organizations. So small nonprofits and organizations that might only have one or two employees, all the way up to large corporations with tens of thousands of employees. And this study is performed on occupational fraud and abuse. And the takeaway that I was hoping to get from this slide is that in all of the fraud cases in this study, that again, the study is done on an annual basis, of all of the fraud cases that were identified in the study, does anyone have an idea what percentage of those were actually detected, originally uncovered fraud through an external financial statement audit? Anyone willing to throw out a guess, since it's kind of hard to see on the screen in the paper? 4%. 4. By accident is 5%. So what that tells you is that you are more likely to accidentally uncover fraud in an organization across, again, all industries, all sizes, across the world, than a financial statement audit. Why is that? You're going to look at me and say, well, why are we paying SEK to do this audit? What are you doing? Because that's not the scope of an audit. By default, if we find fraud, we're going to tell you and we're going to make recommendations on how you can get past that and overcome that. But that is not the purpose of a financial statement audit. And so what I'd like to spend a little bit of time talking to you about is something called agreed upon procedures. Has anyone in here heard of agreed upon procedures or had any of that done? Okay, I see a couple heads nodding yes. So agreed upon procedures is an area that we have increasingly seen our ability to help, especially our nonprofit clients, with some of the issues that they are facing, either in place of an audit or even in addition to an audit. Because agreed upon procedures are specific procedures that can be performed on either financial or non-financial data. And they can be developed throughout the engagement. So we don't need to come in at the very beginning and say, okay, we're going to do these 5 things and that's it. We can develop them throughout the course so that when we first meet with an organization and we start talking about the things that keep them up at night and the areas that they really want somebody external to start looking into, we can sort of develop a baseline of specific procedures that we think are going to meet that objective. But then as we dig a little bit deeper and have more discussions and get into the weeds a little bit of the organization's financials, we can continue to evolve those procedures and perform testing that will get to some sort of conclusion as to whether procedures and controls that are supposed to be in place are operating effectively and things like that. And then instead of issuing an opinion like we do with an audit or with a reviewed set of financial statements, we issue a report that lists findings. So we detail out the specific procedures that we performed and just in very black and white, what were the findings. We don't provide an opinion on how to improve anything. We certainly lead to further discussions on how things can be improved, but it's just simple findings of here's what we did and here's what we found. And then from there, management and the board or whomever's in charge of making those decisions can determine how to move forward. So I want to give a couple specific examples of agreed upon procedures, just to give you an idea of what it is that potentially we could be doing in this type of engagement. And these 2 examples actually both come from nonprofit organizations that we have recently performed this work for. So the first was select a sample of 50 disbursements from bank statements during whatever the agreed upon period. In this case, it was calendar year 2021. Then trace the supporting documentation in the general ledger. Determine whether each was properly authorized and accurately recorded. So in this case, this was a church that came to us and said, we have some concerns about our bookkeeper. We're not necessarily saying we think there's fraud, but we do think that maybe some items aren't being recorded properly. And surprise, when they first called us, they wanted an audit. And we said, we're not really entirely sure that an audit is truly what you want. And we certainly don't want you to be paying for something that's not going to give you the results that you're looking for. So in this case, we started to design some procedures, and this was one of them. And so the client will then provide us with the entire population of their disbursements for the year that we're testing. We independently and haphazardly select the items that we're going to test, because it provides us then one with the ability to oversee the process, but also to make sure that there is an equal chance of all of the disbursements being chosen. So the client doesn't get to pick and choose which months or which accounts or which vendors we're testing disbursements for. And then the first piece to that is to trace the supporting documentation to ensure that it truly was for an expense incurred by the organization, that there's some type of invoice or receipt that can be shown for that. Was it properly authorized by somebody with the ability and the approval to do so? And was it accurately recorded in the general ledger? Was it recorded in the proper expense account or whatever the nature of the transaction was? So that's a very specific procedure that we perform. And then again, of those 50 that we looked at, the report that we issue at the end would show our findings. So we could say we looked at 50 and all 50 had proper approval, appeared to be recorded to the proper general ledger account, etc. Or we could detail out the specific exceptions that we found. And that has proven to be a very useful tool for some organizations who then can use that to enhance their controls and their processes. Another example of an agreed upon procedure that we did for another nonprofit was to compare revenues and expenses from the general ledger for a 12-month period, again, calendar year 2021, to identify quarterly fluctuations exceeding a certain percentage and dollar amount. In this case, the client determined that 50% and 5,000 was a good benchmark, and comparing those to the previous quarter, and then obtain explanations or analysis from the bookkeeper. Now, I will say this was a little bit of a unique situation because looking at 2021 compared to 2020 is going to be an anomaly for a lot of organizations due to COVID. But what we can do there is we can again sort of determine the trends and the fluctuations in certain accounts, revenues and expenses that we would expect based on the organization's operations, and then inquire about those items that are outside of those determined thresholds for acceptability. And again, we didn't go back and say we agree or we think that everything in there is accurate, but we were able to say whether or not the bookkeeper was able to provide explanations for variances that were over that threshold. And from there, it just leads to further discussions with the rest of any additional management and the board for, again, process and control improvements. So, how do you determine the best fit? Again, many of you are in here and have an annual audit, most likely because you're required to have an annual audit. I would suggest that if your organization is not undergoing an audit and you're thinking about maybe having one, that you review your debt and your grant agreements to determine what legal requirements actually exist. Because again, more likely than not, the need for an audit is going to come from some third party that says, we want you to provide audited financials on an annual basis. Sometimes it's not annual. We do have a few clients that only have to have one every other year. I even have one that only needs one every 3 years. But reviewing those agreements to determine what it is that you actually need will definitely help. Discuss the internal needs with your board of directors. Again, a lot of the boards, I think there's a lot of board members out there, especially that want to maintain the integrity of an organization, mostly because they're the ones that are going to kind of be, their necks are going to be on the line if something goes south. But talking about what different options are out there and available for your organizations to have SEK or any other independent CPA firm perform for you guys to figure out what is truly going to serve your needs. And then also talk to your external auditor or accountant to decide what services will provide the desired results. And again, I just want to reiterate that for those that currently do have an audit, the agreed upon procedures engagements can also be done as a separate engagement. So just because you do already have an audit, don't think that you wouldn't, be able to have, we also refer to it as an AUP, the agreed upon procedures. We're, as I mentioned, we're always looking for ways that we can help our clients, specifically our nonprofits, to help them maximize their resources and make sure that the money that they're spending is being put to good use. And so if performing something like this to just get a better feel for the controls in place and if they need to be improved, I feel like an agreed upon procedures engagement could definitely assist with pretty much any of your organizations in here. So lastly, some key takeaways. Not all attestation engagements are created equally. Again, you're getting what you pay for, so that's why audits are definitely going to be on the higher end of that scale because of the level of work that's involved with that and the assurance level that has to be provided. There are financial statement attestation levels that provide different levels of assurance. And again, if you don't need an audit, there is always an option of a review or a compiled set of financial statements. Agreed upon procedures can be specifically designed to address areas that are important to your organization. And again, just to reiterate, those procedures would be combined discussions between the CPA firm as well as the board and management. So while overall your needs would dictate the procedures that we would do, we can certainly assist you in designing the right procedures to get to the end results that you want. And then lastly, using your organization's limited resources to get the most bang for your buck. We obviously want you to be spending your resources wisely, and some things are necessary evils like having an audit, but to the extent that you can do additional work performed in order to get the most bang for your buck, we would be happy to assist with that.